Krish, welcome. Good to have you with us. What are you looking for out of Apple, and what would the downside surprise be that we should be most concerned about?
Sure. Thanks, Tyler. Thanks for having me. I think the three things that investors are looking for is obviously one, how the supply constraints, semiconductor shortages are impacting them. I think last quarter they said about a $6 billion impact in December. Like you mentioned, if you look at all the other semiconductor company earnings, supply shortages are still an issue. So I think that is one thing to monitor. Second one, obviously, is going to be the iPhone. The supply chain data points seem to be pretty healthy. Apple iPhone numbers seem to be pretty good, both in December and also in March on a year-over-year basis. So any color there would be interesting. Services, not a lot of high expectations heading into the print. People expect it to be pretty strong. Typically, March has been seasonally strong for services in China. Let us see how that plays out. And then the last thing I would probably say is that, cost is always another issue with semiconductor components being tight. Are you paying more for those? FX is going to be a headwind, so things like that.
How has the latest iPhones been selling so far as you know?
So far, I think the feedback has been great. If you look at some of the numbers, obviously Apple doesn't disclose units, but if you try to parse through the details, we have them doing close to 82 million units in December. A huge chunk of it will be the new iPhone, the iPhone 13, skewed more towards the Pro and the Pro Max. And I would say that if you look at historical numbers, 82 million is probably an all-time high in terms of unit numbers for Apple in the December quarter, which is a seasonally strong period. So overall, it's been good. The traction in China has been really impressive over the last year and a half. Some of it has to do with Huawei kind of falling off, but Apple has been able to capitalize on that, especially in China.
One of the things that many analysts look at often with Apple is gross margin. What are you looking for there? How important is it and why?
Yeah, I think gross margin is important. We are kind of in the 42% range, maybe a couple of 10 to 20 basis points below from March, from December, but give or take in that zip code of 42%. Like I said, I think component costs are inflationary. Foundry wafer pricing has gone up, but things like memory or NAND costs are probably deflationary. And then obviously you have the little bit of headwind and FX. But I think somewhere in the 41.5% to 42.5% range is kind of where people are, I would say, December and also heading into March.
Sorry, Krish, how important do you think the guidance is today?
I think, Kelly, I think the guidance is very important. Obviously, they're not going to do a proper guidance. They're going to give you some color. I think the reason for that is right now, if you look at it, most people expect flattish year over year for March quarter. And keep in mind, first half of 2021 was a very strong year for Apple. So I think, the minimum bogey year is flattish year over year. Anything more than that would be viewed positively. That to keep in mind that you're operating in a tough, constrained environment.